Good afternoon. Thank you for joining us in our series of Keep Calm, Lend On, edition number 2. Today we're going to talk about digital transformation and how it is needed more than ever. Myself and an esteemed colleague of ours, Mr. Pratik, will be joining us in the communication and the message that we share with you today. Pratik, would you like to introduce yourself?
Hello, my name is Pratik Nair. I'm the marketing coordinator within TurnKey Lender, and I will be helping Jeff with this webinar today.
Fantastic. Thank you very much, Pratik. All right, so my name is Jeffrey Ward. I'm an enterprise executive for TurnKey Lender. I've got a lot of experience under my belt, some gray hairs to show for it. But more importantly, today we're here to talk to you about digital lending, to talk to you about why it's needed more than ever. And so what I'd like to do is invite Pratik into the conversation and keep this conversational and talk about the different experiences and the ways that we see digital lending being so important in the world today.
So let's start off by talking about the traditional lending cycle. Jeff?
Fantastic. Thank you, Pratik. Okay, so back before the Great Recession, I was a commercial lender. I was a business lender for a very large bank, one of the top 6 in the US that you're probably familiar with. And as a new banker, I went from one city to another city to be this banker, and I had to establish a book of business, and doing so either through networking or cold calling skills or just being in the right place at the right time. So this is what traditional lending what looks like today. So what I would have to do is go and find, first and foremost, figure out from the financial institution that I represented what was in their wheelhouse from a credit product perspective, and what segment of the industry did they most enjoy from a credit policy perspective. So I'd have to figure that out. Then I'd have to either find lawyers, CPAs, attorneys, professional service providers that could make introductions into those type of markets, or I'd have to do it the old-fashioned way, pick up the phone, make a call, go out and meet people. Once I had the opportunity to establish connection with an individual, with a borrower, with a company, I'd have to go out, get to know them, build rapport, figure out if there was a credit need or a depository need, and then expedite accordingly. If there was a credit need, it was then specifying to the borrower what documents are required in order to get this credit request approved. It was then providing the borrower the time to collect those documents, to collect the tax returns, to collect create the personal financial statement, to sign it, to get the company prepared financials, all of that. And in reality, that is a tedious process, because the business owner is not only running his business, now he's having a banker come in and say, hey, if you would like a credit facility, this is what I need. So it just adds to the complexity of the borrower's day. Once that information was presented, and that process could take a week to 2 weeks, depending upon the urgency of that request, and the borrower's ability to create and get those documents to me, that could take some time. Once those documents were in hand, it was then submission of that data to our credit department. And then from that point, that data was then taken into electronics. So somebody in the credit office was keying in the data to get to the key ratios that was needed for the credit policy, for that credit request to be approved, right? So analyzing the data, looking at the data, understanding the risks, understanding the debt coverage ratio, you name it, looking at and analyzing that data against the credit policy, against the appetite of the institution I've represented. If I was lucky, the borrower was a savvy borrower and would fit into our credit portfolio. If I was not lucky, I may find a borrower that had no retained earnings, that may have a limited tax liability, but really gave the bank a very poor appetite in wanting to lend money to them. So a very tedious process from a traditional lending standpoint, going out and finding new credit facilities, right? And as a bank, the institution was there to make money on the money that they had loaned out. So me building a book of business and having revenues off of that book of business was extremely important. Okay. Once the credit was approved, it was communication back to the borrower. We're approved. We have to execute loan documents. We have to bring those documents back to our servicing department. We have to have the servicing department review all of the documents to make sure all the I's are dotted, all the T's are crossed before keying that or submitting it into the core. Then we have the funding. Then we have payment servicing. And then in a down market, as we face or potentially face in the future, we have collections. So a very tedious and manual process.
With this whole traditional lending process, could you tell us how the lending technology could help us out going forward with the situations nowadays?
Sure, my pleasure, Pratik. So really, there are a lot of potential bottlenecks that an organization, a lender can face in regards to the old traditional way. In the times as we are approached with today, in the time of COVID-19, in the time of social distancing, a digital lending application makes more sense than ever before, and it's been thrust upon us, right? So, one of the things as an organization that is very important is communication with your potential clients, communication with your potential borrowers. Let's really give them expedite the customer experience. The bottlenecks that I saw all the time was that when I would go and meet with a potential borrower, I'd have to explain to them what documents I needed, why I needed those documents, and what the bank was going to be looking at in order to approve a credit. So really putting a lot of burden on the borrower to create these documents, get these documents to me, and understand what those documents meant to the institution. The distribution of those documents to the credit department, and it was literally taking those documents, standing at the printing machine and scanning in a package of sometimes 100 documents, 100 pages, sometimes 500 pages, depending on the complexity of the credit request, right? And then, communicating with the borrower, Mr. Smith, thank you very much. This is where we are in the underwriting process. We're 90% of the way there. I need some additional documents. Can you provide these documents to me? And then having to contend with Mr. Smith's schedule so that I'm not interrupting his business. I'm not interrupting his day. I'm being of an asset rather than a liability to Mr. Smith. And then from a credit shop perspective, so once that information has brought in, it's the management of that information as it lives and all of the different technologies that a credit department could use, right? So your core banking system, a spreading application, a pricing application, a servicing model, a collection model. So having redundancy from keying data or keying information from one solution to the next, making sure that there was no human error, making sure that that was consistent and in alignment with credit policy by which the credit shop operates, by which what reduces the risk of the financial institution.
So how can these bottlenecks be eliminated by using lending technology? Well, how can we better the traditional lending lifecycle?
Fantastic. So the way these bottlenecks could be eliminated is really kind of at the forefront, right? It's a very creative process today, but it's leveraging technology and understanding the ways technology can change the game, right? So communicating with your borrower in a way that it's educating them to the credit products that your institution offers. How you do that is independent of the financial institution. Um, Really then focusing on the customer experience, right? And making it as easy as possible for the customer to apply for the credit facility. We have numbers that tell us in the small business market that 70 to 75% of the applicants applying for small business loans leave the application process because of that complexity. So there's opportunities that are being missed because of the collection of these documents, the complexity of the application process, and putting that on the borrower to submit all of this information in a very old-fashioned, archaic way. So really, the technology has been designed and developed to give that borrower a better experience, right? And communicating with that borrower as quickly as possible, approve, counteroffer, or adverse action, right? And doing so extremely quickly is key because, as we all know it today, we live in a culture that has no patience anymore. I want it now. Think of the Apple credit card application. In the time that we could be having this webinar today, you guys could go apply for this credit card, the Apple credit card, and not only could you be approved, it could be funded. You could use your Apple wallet and go buy a Starbucks coffee after you put your gloves on and your mask, of course, to be safe during the COVID times. But we're talking about that type of speed. We're talking about that type of reaction to the request, right? Versus, and one of our owners had this experience, versus applying at a very large institution for a credit card, getting an email stating, thank you for your application. We will mail you a letter in 30 to 45 days that will tell you if you are approved or denied. Think about that experience. Communication is key, leveraging technology and integrations to enhance the customer experience and getting the customer an approval faster than ever before.
So, how has the traditional lending lifecycle been affected by challenges such as COVID-19 and social distancing? I know I asked this earlier, but let's really focus in on the topic.
Okay, so here's here's an example, right? I'm a financial institution, and in good times, I do consumer lending, I do C&I lending, I do commercial real estate lending. In times like we're facing now, I've got loan officers that are potentially working out of their house. I've got loan officers that are not in the branches. I've got resources at the ready, but because of these conditions, I'm no longer able to let them do what they're doing. So they're leveraging the phone, they're leveraging other means of communication and technology to talk to their borrowers, right? So the face-to-face interaction is no longer there. Being able to go and tour a borrower's facility, understanding the nuances of the business, what they do, how they do it, the quality of the company, the cleanliness of the company, all of that is still very, very important, but very difficult to do currently, right? And now there's very much this need for the digitalization of society. It's a matter of life and death, right? So digital lending has the ability for a borrower to apply online using our technology and some of our secret sauce based upon the institution's credit policy that should partner with us. We could give a borrower very quickly an approval, right, based upon the requirements of the credit product. We could give the borrower very quickly an approval, and then the loan officer is calling Mr. Smith and saying, hey, Mr. Smith, thank you for your application. Good news, you're approved. Or Thank you for your applications, Mr. Smith. We have a pre-qualification. I need a couple of additional documents for you. Or Mr. Smith, thank you for your application. There's an approval, but we've got a counter offer that we need to negotiate, right? So, and doing that in a matter of minutes rather than a matter of weeks, as what I discussed with traditional lending as I understand it, right? So I would assume, right, that Mr. Smith would be very much more interested in scheduling his day or making a meeting during his day, knowing that the banker's coming out, he's got an approval in hand, and he's got a couple of details that he needs to address before I can get to funding, right? And digital lending can take that experience to the next level, right?
So why is digital lending strategy so important, especially now?
Good question. I thought you would never ask. Well, you know, as the kind of the theme of this and is that we're looking at ways to enhance the customer experience. We don't have any patience, and technology provides us the ability to communicate quickly and effectively with our borrower, and in doing so, ending the shopping experience, ending applying at multiple places, waiting for the first response, and increasing customer experience overnight. So quicker decision capabilities, yes or no. Anybody that's on this call today knows that the slow no is the most painful no that a borrower can get. It's also the most difficult no that a banker has to go back and present to somebody where they've established a relationship and rapport. And the amount of time that it's done that, right? That is extremely painful. I can think about on the back of my hand the times that I've had to do that, and I would rather have not had. And look at the success that Amazon's had today, right? Think about how they've transformed the industries that they represent, and now they're everywhere, right? So just think about that. I don't want to put anybody out of work. I don't want to, and our technology is not going to do that. Our technology is going to give the financial institutions that partner with us the ability to do more with the same amount of staff or with less going forward, making you more efficient and more effective. And then to my Apple credit card point, think about funding at your fingertips. Think about any one of you right now could have applied for a loan using our solution as the conduit from application to approval, being able to leave this webinar and going out and having access to that capital immediately.
So how did the introduction of digital lending change the loan lifecycle as we know it, revolutionize it?
You know, I don't think it's really changed the loan life cycle as we know it. I still think it's very relevant from application to origination to underwriting to pricing to servicing collection. I think what digital transformation has done to the loan life cycle is really brought it into an environment, into a world in which all functionality, all steps in the loan lifecycle can be handled in one simple environment, so that now a financial institution has visibility into the amount outstanding to a borrower. Now the institution has the ability to modify, to defer, or to adjust the credit facility. Now the financial institution has the ability to see the overall health of their credit portfolio at any step in the process, and gosh forbid have to collect on that.
A quick recap of traditional lending versus digital lending experience.
You know, I'm probably going to get on my soapbox for this one yet again, but really, you know, we're looking at and we're focusing on the customer experience. We're looking at and we're focusing on the automation of the process, the automation of the collection of the documents, the automation of the analyzing of the documents and the financial data points within the documents, that have to be determined against a financial institution's credit policy. We're looking at automation from communication with the borrower, letting the borrower know we've got your application, you're approved for adverse action, and doing so in a timely manner. We're talking about automation of the loan lifecycle from start to finish. And all of that adds up to efficiency. Efficiency so that I can do more with less.
So, what would be some closing facts that you would leave us off with?
So I would say, closing facts, this is a great point. So, the landscape as we have known it has shifted overnight, right? And depending on what side of the fence that you sit on, and I am greatly I'm greatly blessed to be in the position that I'm in, and I hold those that are not in this position in high regard and in my thoughts and prayers. But that the world has changed as we know it. COVID-19 has brought that to our attention, especially from a lending perspective. As we all know, social distancing is the new norm, and the effectiveness of the relationship building, which is still key, but has been changed overnight to where now, as a society, we don't know who we can trust and who we can trust or we can't trust based upon this little bug. I think with the challenges that we are presented with today, that digital lending gives the institution the peace of mind that their clients still have access to those funds, that their clients still have access to the institution, that their clients still have access to being able to communicate in an effective electronic manner that will keep them from dying because of illness. And to our points that I've discussed earlier, the digital lending technology, supplements, automates, and even adds more efficiency to the loan life cycle, right? Which we all know, if we've been in this world, we have our ups and we have our downs, and how we can navigate those as efficiently as possible gives us the ability to play again, right? And one point that I haven't brought up, but one point that is very critical, a digital lending solution has the ability to give a financial institution the means and the ways to turn the switch on for a credit product. Say we're in good times, we loosen some standards for the credit policy because of the demand, or it has the means of shutting off the faucet in down times when things are not where they should be in the lending environment, and doing so in real time, not having to go and adjust policy and a hard-coded solution, but doing so in real time. So digital lending provides the institutions that want to use that type of strategy the ability to thrive and survive in any type of market. Are there any questions that I could address for you today? And I greatly appreciate your time and your audience.
If you have any questions, please take the time to type it into the chat, and I will read them out to Jeff, and he will answer accordingly.
Right now, I'm seeing a question. What size organizations is your programs geared toward? I would say our application, our solution is geared toward any type of traditional or non-traditional organization. I think that the more important question would be, what credit product would be a good strategy to roll this out for your organization, right? And how could we measure the results of leveraging digital technology for that credit product? But regardless of size of institution, TurnKey Lender is open for business.
So we have a question from Brock Freeman. What kind of business continuity plan do you have in place for your hosted solution? Failover, backup, data preservation, etc.
So from a deployment perspective of the cloud, we would use any of your favorite flavors. Could be AWS, could be Azure, could be Google. Um, we have redundancy backup policies in place so that should there be a situation where where there was a disruption of service, there would be no failure to our clients.
We have a question from Julio Ortiz. He asked, does Turnkey Lender work with brokers?
Yes, we do. Yes, we do. We have some applications and we've done some configurations with our solution that speak specifically to brokers and their needs for understanding their credit requests quickly and efficiently.
Are there any more questions?
I think I see one more question. How does your solution stack up against other competitors in terms of flexibility and adaptation to the different geographical environments? I think that's a great question. I think first and foremost, our application and technology is relatively new, being around since 2015. So that means that we're built on the latest and greatest SQL-based or SQL stack technology. I think that means that ultimately we have flexibility in the configuration of our solution versus a hard-coded solution. What this would mean to an individual or to a firm institute that partnered with us is that we can configure our solution to the workflow as it exists within your organization today, rather than taking a hard-coded solution and customizing the solution to fit into your workflow. When you introduce customization to hard-coded technology, many times there's challenges and issues and breakages of the customization when a software publisher pushes an update or an upgrade. We have functionality within the solution that can, with Google Maps, where you could see specifically where a borrower resides, where a borrower works. So we can use geographical technology to really give you different data points to review and analyze from a borrower's perspective.
We have another question from Brock Freeman. He asked, is there any plans for integration of AI to analyze the loans?
Great question, Brock. Yes, there is. I don't want to let the cat out of the bag, but we do have integrations that we will be showing and will be showing off very quickly, like an integration to QuickBooks, like an integration to a bank account information, looking at trends for debits and credits, integrations with IRS so that we can look at tax returns. But really, what these integrations boil down to is, again, the customer experience and limiting the amount of time and energy spent by a borrower or by a business owner applying for a loan.
Any more questions? Okay.
Well, thank you very much for your time. Yes, here's one more. How does one cut through the noise with the myriad of LOS and LMS offerings out there and determine which platform is best for their organization? Great question. It would depend on the institution's appetite for partnering with a digital lending provider. I think what's key is understanding the value that the LOS or LMS provider can bring to the table. Is that value through the flexibility of the solution? Is that value through the configuration of the solution? Is that value in the understanding of scoring and decisioning requirements? I think it very much depends upon what the financial institution's overall goals are. That would best determine what LOS or LMS would fit your institution. We would love to be invited to and participate in any evaluations that you may be doing of an LOS or LMS. And given the opportunity, I think you would be pleasantly surprised with the resources and the functionality that we can bring to the table, given the opportunity. We greatly appreciate your time today, your time and energy, especially during these challenging times. I greatly appreciate what you do and why you do it and who you do it for. And we will be conducting more of these. I think what you will see is that Turnkey Lender will start to have a repeated series on Keep Calm and Lend On. And one more thing before I close, we will be doing some blogs and some videos in the very near future that you'll be able to find on our blog post, on our Twitter account, but also on our website, where we're going to show how we can use our technology to look at not only the traditional credit bureau, but the integration to the accounting package that I talked about and the bank account statement, and looking at how those integrations can and the AI, the analyzing of that information, can expedite the customer experience and get to an approval or an adverse action in real time. Thank you very much for your time today. Have a great Wednesday. Keep calm, lend on.